Welcome to This Year in Real Estate 2023. We have seen an amazing year sitting here with my incredible team. So what were some of the biggest learnings and issues that we had and things we learned this year? Romesh?
Some of the biggest learnings was the interest rate rises, how that happened. We were told, essentially rates won't go up by end of 2024 by the RBA, and they just kept going up every month, and that was very challenging for our clients. And us as brokers, we had to pretty much find solutions, work with our clients, give them, understand what are their goals, how we can help them achieve those goals long term, and just really brainstorm as a team and find solutions for our clients.
So for the clients to settle, what was some of the things that we did in terms of putting buffers in place, making sure they can have an interest rate rise? What were we doing as a business to ensure that clients are safe?
Yeah, of course. So first things first, borrowing capacity. Being not too conservative, but also having buffers in place so that our clients won't go into financial hardship buying property, and also making sure our clients understand what those buffers are. I think are very important. Things like holding costs, using your equity to buy property instead of using their savings, redirecting that to the offset against the owner occupied is very important. Showing them, how to save money long term as well. If they've got investment properties, asking them to have a chat with their accountant, see if that's still working for them. And if it's not, potentially looking at selling, going again with another investment property that works, is more suitable for their goals.
I think the biggest takeaway from the interest rate rises was most people in the mortgage broker industry haven't had the experience of raising interest rate rises. So it was an absolute learning curve for the majority of people in the industry. And the biggest challenge was we kept getting told it might be small rate rises. No one expected 13 within a 15, 16 month period. So to have those buffers for something, especially in our industry where you're selling off the plan that might not title for 12, 18 months, to have that much buffer was obviously something we had to counteract and be really proactive with as a group. And I'm sure the rest of the industry had to find ways to manage that as well to ensure customers were able to proceed for those long-term buyers.
And even if they were small and incremental, as you said, when there was like over 10, like 13 of them,
Yep.
Even small ones will start to add up pretty quickly, won't they?
Very quickly, yeah. I think the average borrowing capacity went down around $250,000 over the last 12 months.
It's absolutely massive.
Also, to add to that, fixed rates. A lot of people were comfortable with their repayments on fixed rates, low twos, not even 1%, 1.98. Coming off that and seeing that your rate's going to 6% is a massive jump, but we were still able to help clients build their wealth through investments.
On the resale side of things, one of the good things is for a lot of the new clients coming to market, they've never held a mortgage before, first home buyers, so they never experienced what 2% would look like as a rate. They are really coming in knowing that 6 and 7% is what they're expecting to pay, and they can service those. And it has changed the demographic of buyers on resale. We've seen a retreat from a lot of investors, or a lot of hesitant from investors to rebuy in the market at the moment, second-hand properties, but a lot of owner-occupiers are moving into those same spots. So we've seen significant growth for our clients in the last 7 years, but a lot of those properties, a lot of those markets have really reached their peak when it comes to investment value, and now it becomes a more mature market where it's mostly owner occupiers and less investors. But speaking to the team about the other investment opportunities that are opening up around Australia, we are seeing areas that were like Geelong and Ballarat 7 years ago. They're at the bottom, ready to sort of rise. So a lot of smart clients are now cashing in their chips and moving on to something better.
That's a great point, and I was going to bring that up. So we've obviously been fortunate enough to be in business close to 19 years, and now we're seeing those cycles with our clients making great money, cashing in, paying off their mortgage, reducing all their bad debt, but then actually looking at the next Geelong, the next Ballarat, the next up-and-coming area where they're making a lot of money. I know that you're putting a lot of investors in different areas all around Australia because we're always looking at emerging markets. What's 9 o'clock on the property clock and where can they make money?
And it's so important that as a business that's got 19 years in history and 19 years of successful portfolio building for our clients, that we are continually looking at that next best area. So it's not just, I suppose, waiting or looking at the data. We then go in market as a team We look around the areas. There's good pockets and bad pockets to every suburb. Why should we put our investors at Reventon into these specific locations? And that's the importance of doing the data analysis, but also then getting in market. So the team and I, we've just come back from a couple of trips. We were in Adelaide, we've just come back from Brisbane, and more recently Perth. And we've been in market, I suppose, rechecking a lot of that data and having the sniff test on it as well to say, this is a good location for us. The data predicts that this will cycle up, but also, we're seeing it with our own eyes and we're very confident with our decisions.
Makes a big difference because when we're going on and actually you touch and feel and see the product, you're seeing it from one point of view, but going there makes an absolutely massive difference. And I think from our clients' perspective, can give them a massive level of confidence that we're also investing in these areas personally. We put our families in these areas, our teams invest in these areas, and we know that they're great areas. We do our own research, we do independent research, and the third check and balance, which I think is the most important one, would we personally invest in these areas? And we're personally investing, we're inspecting our properties, our clients' properties, and also future opportunities.
Yeah, and that was the last trip over to Perth. We were walking through our staff, our friends, our families' properties, and their hard-earned money that goes into these investment properties. So it is really exciting to be able to come back, share those videos, provide those updates to our colleagues, our family, our friends, and also our clients.
Of course.
For me, that's what Marcus says, a big selling point from a different department. So obviously from a lending perspective, I think stories are really powerful. I often tell clients about other clients that I've met in reviews and how they've actually invested and chosen the right time to invest and how they've leveraged off that investment using all the combined knowledge that we have at Reventon. I think that really sets us apart as a company, as a business, and just provides a lot of value to our customers as well.
And just to share with our listeners, what do you think some of the main tips and tricks that people should be looking when getting a mortgage? Because obviously you're a great broker, you've been doing this for quite some time. What are some of the things that they should look out for and some of the things that you should say, be mindful of these things?
I think firstly, being educated is really important, and a good broker will actually focus not just on pushing a product or pushing a time frame. They'll actually take the time to educate customers. If a customer is more educated, they're going to ask the right questions, they're going to understand the process, and you'll have just in general less of a disconnect, or that could happen potentially as part of the journey, because we as brokers give advice and information to help clients make the right decision. But if that client's not 100%
aligned with what we're saying.
Aligned and doesn't support what we are also trying to encourage them to do, it makes it a lot harder.
And I think it's important to know, because we talk about banks, but a bank's not there to give you the best possible product. A bank will give you 2, 3, 4 alternatives to pay for a mortgage when in fact there's hundreds. And I always say a broker, and a good broker, not all brokers are created equal, is aligned interest with the client. What I mean by that is they want to build your wealth, get you into as much safe debt as possible while you're building your wealth. As a bank, all they want to do is make sure that you can pay interest for as long as you can, or if you can't, they can seize an asset. So I think a good broker and a client's values are aligned because they want to build wealth, borrow money safely, and be able to build that property portfolio.
Yeah, absolutely. I couldn't agree more. And I guess you asked what are things to sort of stay away from or give clients advice in that space. For me, it would be definitely not be just rate focused, especially when you're an investor and you've got to be able to see the bigger picture. So again, the education piece is really important here. You've got to be able to trust your broker to give you the right information and tell you what that bigger picture looks like. Not just, this particular lender's offering this particular rate, let's jump on, because tomorrow it might not actually be the case. And then what are you going to do? Jump off that ship, try and go somewhere else, and you lose a lot of money, a lot of traction in this process as well.
Great costs, solicitor fees.
Absolutely.
But also people, what do you need the loan to do? Should it have an offset, a redraw? Right. There's so many bells and whistles. People that are only, what's the rate, what's the comparison rate? There's so many questions you need to understand. People that are only looking for the cheapest rate, is that the most suitable loan for you? Is that the best lender for you? And a good broker should, as you said, educate you and take you along that journey.
Yeah.
I think we, touching what both Maria and Romesh said, we often get clients come to us who have been set up by going direct to bank or through other brokerages, etc., where they have been offered the best rate on their investment / owner occupied, but not necessarily what is going to get their owner-occupied debt paid off quicker while keeping their investment as low as possible. So they might go and refinance their debt and their investment rate comes down, their owner-occupied might go up slightly and they're ahead month to month from their repayments. However, as we know, the best strategy is to reduce that owner-occupied debt, get rid of that bad debt, keep the investment up, because that's how we're going to create wealth for the clients.
And it's
they
also
often
tax
come to us.
efficient debt.
Correct.
So I always say, if you walk into the CBA, which product are they going to offer you? Which bank?
CBA.
course.
They've only got 2 products.
They're never going to offer you any other bank product.
Yeah.
So a broker will actually go across all banks, all non-banks as well, to assess that. So it's so important. You're walking into a bank, they're only going to show you their own product, and they're not going to educate you on which is the best product for you to build your wealth.
Correct.
Just touching on that, Chris, as well, at the moment, there's a lot of government schemes that are really dependent upon specific banks. So it's important to deal with a broker who actually understands if you've got a specific deal you're working on, you might only be able to attract a couple of different banks, and it is important to deal with brokers in that way. So,
In addition, we talk about what people should be looking out for with regards to the banks or lending, etc. I think one of the beautiful things that happens within the Reventon business is we all talk to one another. So myself, who is recommending properties to an investor, I'll be able to sit with Maria or Romesh, talk to them about the client's long-term goals. It's not just about how can I help you buy this investment property, how can I help you build a property portfolio? And if we have that longer term view in mind, and I think the important thing is the reviews. We sit down regularly and review our clients every 6 or 12 months, because it is this long-term approach. It's not, can I help you buy a property today? How can I help you set up your future?
It's not transactional, it's transformational, it's relational. So about that relationship with the client, to create like a client for life experience.
I remember sitting on a meeting with Marcus with one of his clients, and letting them know it's not short term, it's definitely long term, seeing the bigger picture, and just ensuring that don't be scared of lenders you haven't heard of, because sometimes they do have a lot of policies, or they might be better suited for you, or they're more generous with their valuations, which helps you create more equity. So that really helps, especially clients who are rate focused. They're kind of limiting themselves in a way. Sure, they save so much money on interest, but in the long-term scheme of things,
What does it cost them?
is not. Yeah, what are the impacts versus the benefits? And we really look at that together. We do our strategies together before we sit with clients and actually go through that.
So basically it's a cost-benefit analysis.
Yeah.
It's not just what am I saving, what's the opportunity cost, where can I be making money in additional areas?
Correct. And there's a lot of investment loans that are just not structured properly, and equity releases inside the owner-occupied loan, and it's just crazy what we see.
I think touching back onto something Marcus pointed out, Reventon is one of the companies, having worked for other companies who are rivals to us or in the same industry, you won't find Marcus getting a client to go up to their maximum borrowing and max them out after that one purchase. Our aim is to build their wealth through multiple, and so it is important that you speak to someone like Marcus or Lockie, who's in our property team, and the brokers, and we all are aligned, and we've got that one goal to help create that long-term generational wealth. So it's not about getting in, getting one, and then getting done from that investment. So I think that is a really good focus and a good strategy, obviously from a business point of view, but from a client point of view, to review that every 12 months to see what can perform better. And if it's not, as James said, is it time to switch out and then reinvest into a new area? So it's that whole process from a business point of view, which is a difference maker in this industry.
So looking forward to 2024, what are some of the key things we can look out for? Maria, I'll start with you.
Sure. My aim is to hopefully see some stability in the interest rates going forward, which is the prediction at this stage. But I think more preparing for anything that's going to come. I'm just going to focus on educating my clients more, trying to reach out to a lot of my own network, and I feel like I've started to be a really big promoter of Reventon because I believe in it, and I believe in the brand, I believe in what we're all here to do, and I think that makes it really easy. So that's my aim for the new year.
So similar to Maria, I think re-educating customers as an overall, that a lot of them have come into the market with 2.5% interest rates, and as James said, the new ones aren't used to that. And it's about, I've had conversations over the last few weeks with so many clients who are waiting for the interest rates to come back down to that 2.5%, 3%. we're never going to get that again. It's about re-educating them that it's still the right time to do something, because there's no time like the present. So just that whole re-education piece where the market might drop back down from an interest rate point of view, but it's never, we've got to be realistic with customers, so they've got that expectation moving
It's the
forward.
cost of waiting, the opportunity cost of not acting.
Correct.
And I always say to clients, there's a few things you can always be guaranteed. You're still going to pay tax, you're still going to need to retire, and you're still going to start building your wealth. Those things will never change, so action is very important. Marcus?
Well, 2024 represents some really exciting new opportunities for Reventon's clients. We are knee deep in research currently on some new areas that currently show some really promising signs. We're very excited as a team to be able to present these options to our investors, but there is so much opportunity within the sweet spot of the market where we focus, and the rental returns are really strong. There's great tax benefit for people, and I think the big thing with Reventon, we talked about our solution and interest rate rises last year. For 2024 and beyond, Reventon don't just focus on a single property type. We do established property, new property, townhouses, houses, apartments, everything. And I think
Locally, the state, we do residential sales as well.
so it's really exciting to see what 2024 will hold from a property sense.
Romesh?
From what I've heard and all these sessions we've been to, it seems that rates should come down next year. Not guaranteed, obviously, the crystal ball. Not sure how much, but what we've also noticed is when rates come down, property prices go up, and people who wait too long or don't want to get their foot in the door, rates going down. Can I buy again? Yeah, but it's going to cost you 50 grand more to get into the market, or it just depends on the situation. So I think people wait too long, or they're just waiting. You've had a lot of that experience, and the ones who act now are the ones who are able to see that long-term growth faster.
Yep.
And I guess just be mindful of spendings as well, because a lot of people don't understand that banks do look at your expenses, like they want to know how much you're spending, and that does affect you and your mortgage long term too. So it's just be mindful.
Good advice I heard many years ago: you never outsave the market. Even if you save, it will go up. And there's always that picture I've got in the back of my head: the old man who waited for properties, the man who waited for properties to go down. He's got this really old man, frail there, waiting for properties to go down. I always see that picture, and I remember, if you're going to waiting to go down, you'll be around 100, and then you're still waiting to get into the market.
What's the say? It's not
Time the market. It's not timing the market. It's not timing the market. It's timing the market. James?
Look, 2024 is going to be a very different field than it is been in 2023. We've seen a lot of people that held their breath during COVID that were in the market. So there was an abundance of stock in a lot of areas. And that is really a couple of years worth of stock that's been pent up that's suddenly going to be gone. So in 2024, when we see reduced numbers of properties available, reduced stock, increased competition will assist with prices. But as I said, obviously, if we get some interest rate stability, that'll help as well. The argument is always going to be, if you can cash out now in a good market and get onto the bottom edge of a growth, as you say, you can't outsmart the market. So you will find that even if you're looking at not as much profit next year as you were hoping, or maybe you could have got in October of last year, getting out now and getting that money into somewhere where there is more growth to be had is just the smart, and it's the right thing to do. And it's for a lot of clients, they just need to really assess, have they bought the right asset? Yes, it's had its growth. For a lot of those clients now, it's time to cash in on that growth and look for where the next big write-up is. Because I've got some clients I've spoken to that say, well, wait till it gets back to its October prices. And I keep saying, by the time that's happened, if you'd cashed out and gone into Toowoomba or Townsville or something like that, you would have doubled your money.
You'll make tens of thousands more. But,
Exactly.
but we're also talking to clients, they're actually using that to pay off their own mortgage, their bad debt, and using it to build wealth.
Yeah.
But it comes down to, even with what Maria said, getting the right education. And our first meeting's a discovery meeting, whether it's with Reventon or any company that knows what they're doing, they're well versed, been around for a long time. That first meeting, I think, is the most important, because it builds your knowledge and educates you on a plan. Now, a plan can change over time. A plan needs to be nimble, which is why the 6 and 12-month reviews are so important. Because if you're going to buying a property is easy. Building a portfolio takes a lot more strategic planning, understanding the market. We've all discussed forward indicators, why a market's going to grow, and why it's primed for growth, which is well versed, and it all comes down to research.
And we do offer free consultations with all our departments. So if you ever want to speak to a specialist, you know, we're here.
Thanks for watching. Merry Christmas and Happy New Year to everyone and your families. If you have any questions, please reach out to our expert team. We're happy to assist you. And thank you to all the team for joining us.
Thank you.